Tell me about the quarter just ended, and then even more importantly, the guidance which they had to bring down.
Absolutely. So kind of a mixed quarter. In general, we like the fact that they beat on sales, they beat on earnings. The one flaw we'd point out, they got a big drug for breast cancer called Ibrance. They did miss in the U.S., so a little bit of a slowdown there. Something that's kind of concerning, but that drug's doing about $4 billion a year in sales now. It's probably headed towards 10. So, several years ahead in terms of growth. But so looking backwards, I think it's actually a pretty good quarter. We look ahead. Certainly, stock is off. You mentioned some of the other stocks off today. I think a big part of that could be the new CEO coming in. So Albert Bourla is coming in. I think he does want to just take expectations down a bit at this point in the year, give himself a little bit of wiggle room to come back and at least meet or potentially exceed some of these numbers as we get towards the back half of the year.
What's the story, the growth story for Pfizer, given that the regulatory backdrop is always a little bit uncertain or maybe even negative at times with drug pricing? But what would the positive story be? I know it's got a decent yield, but yeah. Is it a pipeline story?
So, I think it's diversification. It's basically this company just doesn't have a lot of potholes. I mean, you look at a lot of other big drug companies. They got massive blockbusters that could go generic, next year, year after. Pfizer's got one sort of smaller pothole this year. So Lyrica is a drug for pain. That's going generic. That's probably what's hitting guidance today as well. Once you get beyond that, Pfizer's got a very nice sort of runway. So they've got from now until, let's say, 2025, 26, potentially sort of 5% earnings growth, or sales growth, rather, in that time frame. So it's pretty interesting where some of the peer group, they may see a little bit more of choppy results. So that's one of the aspects we like of Pfizer at this point.
Mike, would you consider Pfizer to be a likely player in any further consolidation? Are they going to be a bidder for some of the more targeted biotechs or anything like that?
Great question. So at this point, we would say no. The company's been out. They've said, we don't want to do the mega deal. Of course, that's corporate speak for, we're going to say no until we say yes. So it's hard to know what to believe there. But in general, if you look at what they're doing, they don't have a massive hole to fill, like some of the other companies, let's say Bristol, for example. So at this point, I think they're in pretty good shape. If you roll the clock forward 2, 3, 4 years, they do get a bit of a hole, like I said, the middle of the next decade. So at some point, I think at this point, you're looking at tuck-in deals. Now, those could be 4 or 5, maybe even a $10 billion deal, but I just don't see Pfizer going out and buying Gilead or buying some other massive mega cap at this point.
I don't know where the next big Lipitor or whatever comes from, though. I mean, it'd be nice to, Alzheimer's. We always hear about the company that finally figures out one of these chronic diseases for an aging population is going to be the one to buy. Do they have the research team available to be at the forefront of the next big discovery, do you think?
So, I'd say Pfizer, I'd say it's above average in terms of their research team. Now, this isn't cutting edge, some hardcore biotech that's going to cure some massive disease.
That's like the AT&T commercial. They're okay.
Okay. I mean, Pfizer is a comfortable pair of shoes. Okay, this is not some exciting, they're going to knock your socks off sort of thing. But, the part that we like is they're diversified. So you're not banking on one massive product to sort of save the day. They got a bunch of different drugs. And frankly, what's helpful for us, a lot of them are already on the market. So this drug, Ibrance, which is some bumps in the road, you got $4 billion now, headed towards 10. That's a very, very nice tailwind over the next few years. And then you're not banking on, 5 to 6 other drugs that have to work. Some of them may work, but if 1 or 2 drugs work, $2, $3, $4 billion of sales, that's helpful, but you're not banking on it.
What's your favorite major?
We like J&J. That's probably our most attractive. There's a little bit higher risk reward here compared to Pfizer. Obviously, you've got some litigation risks that they have to work through. We think that they're successful there. But J&J, we like the diversification. We think, just look at the track record, it's pretty stellar. For J&J and Pfizer both, I think both of them are trading at pretty reasonable valuations. You roll forward 6, 12 months, we're closer to a recession. Some of these companies trading kind of low teens PEs. It looks very attractive as the economy starts to slow down.